Imagine this. Silver just ripped through $84 an ounce overnight into February 21st, 2026, surging nearly 9% in a single session on COMEX, closing around $84.57 after blasting from the mid-70s lows, with spot prices pushing even higher in early Asian trading. Traders are stunned, shorts are getting torched, and the market's on fire again. But here's the massive twist that hooks you right away. This explosive move isn't random. It's the direct fallout from the Supreme Court's blockbuster ruling that struck down Trump's sweeping global tariffs, creating a silver trap that burned the shorts who bet against the chaos. While China's market reopens Monday, after Lunar New Year, ready to amplify the squeeze with their export controls still in full force. Welcome to Elite Capital Decoded, where we uncover how these elite power plays are reshaping precious metals. If this adrenaline-pumping surge has you locked in already, smash that like button right now and subscribe, because what happens next with silver could be legendary, and you need to be positioned before the next leg up. Let's dive into this high-stakes drama, like we're replaying the tape of one of the biggest market flips in recent memory. Silver's 2026 story so far has been pure volatility. It rocketed to all-time highs over $120 in January on relentless industrial demand, China's strategic grip, and tariff uncertainty fueling safe haven bets. Then came the brutal correction, down 25-30% plus in spots to the mid-70s. As margin hikes on COMEX flushed out leverage players, a stronger dollar from solid jobs data crushed rate cut hopes, and hawkish Fed echoes lingered. Shorts piled in, thinking the mania was over, betting on a deeper pullback to $60 to $70 fundamentals. But Friday's Supreme Court bombshell changed everything. In a 6-3 decision, the court ruled Trump exceeded his authority under the International Emergency Economic Powers Act, IEPA, by imposing those massive global tariffs last year, calling it unlawful overreach. Layer on the physical reality. COMEX inventories remain strained, with registered stocks thin after huge deliveries. January's 49M plus Oz pull, February chewing through 20M plus more, open interest elevated, and coverage ratios low. Physical metals getting sucked east, China's export licensing. Only 44 approved firms for 2026 to 2027, prioritizes domestic solar, EV, and tech giants, fragmenting supply. Shanghai backwardation persists at records. Premiums $10 plus over COMEX, draining Western vaults further. Now the big catalyst ahead. China returns Monday after Lunar New Year shutdown. Trading resumes full force in Shanghai, where silver's already shown leadership. Domestic demand overwhelming. Stockpiles low, 318 to 350 tons. And their strategic hoarding, 60 to 70% refined control, turns silver into a geopolitical asset. With global deficits hitting the sixth straight year, 67M Oz per Silver Institute, industrial use steady at 650M Oz, EVs ramping hard, AI/semiconductors inelastic, solar thrifting offset by volume growth, mine supply flat, recycling lagging. This reopening could ignite another leg up as Asian buyers pile in amid tariff turbulence. The shorts? They're scorched. Bets against silver assumed macro relief would cap upside, but the Supreme Court's ruling plus Trump's counterpunch plus China's return created the perfect storm. Uncertainty boosts safe haven appeal, physical shortages expose paper weakness, and squeeze dynamics force covering. Volatility's extreme. Dips bought aggressively around $75 to $80 floors, but structural tailwinds, green tech boom, East dominance, make the upside asymmetric. Analysts are $100 plus fast if momentum holds. Long-term, $150 to $300 isn't crazy in this new paradigm. This isn't just a price pop, it's a market reckoning. The Supreme Court's silver trap exposed how fragile the short side was, while China's Monday return could weaponize the squeeze further. As silver holds $84 plus and pushes, the question burns. Is this the start of the next parabolic run, or am